to Haptik Customer First, presented by CNBC-TV18.com. I'm Shibani Gharat, and today we are discussing how geared up is the insurance sector for efficient customer service in the coming days. And joining me today is Abhishek Gupta, Chief Marketing and Customer Experience Officer at Edelweiss Tokio Life Insurance. Abhishek, welcome to the show.
Thank you, Shivani, and thank you for having me on the show.
Abhishek, apart from the healthcare sector, insurance companies have seen a lot of growth and interest by the customer, especially during the pandemic. Can you share with us how has this, risen interest because of this entire uncertainty around us, has been received by your company?
Shivani, actually, you're actually right. There has undoubtedly been a shift in how insurance, or let me tell you, overall risk management is perceived at an individual level. Before pandemic, people actually believed that having a decent financial corpus that they are building through investments and savings products is enough to cater for lifelong aspirations. But pandemic has lifted actually this fog of illusion. People now understand that the financial challenges that life insurance addresses, and it can actually help protect the wealth that they have accumulated from sudden changes in life. So for some time now, our focus had been to build a destination, a preferred protection destination for our customer. But the first challenge was always, and not with the entire industry, was always counseling the customer on the need of the product. The silver line of the pandemic was that the conversation now actually has moved from why do I need it to tell me what do I need. So that has been the change. So while naturally in incidents like this, the term insurance will see an uptake. But what has happened is the conversation now has gone beyond so what we call as the unforeseen event, which is death. The conversation now is actually going towards how mature markets are behaving, which is the need for income planning. Because there was a lot of pandemic also saw not just deaths, but a lot of job cuts, salary cuts, job losses. So people started realizing that there's a need for income planning, probably building a steady stream of second income, goal-based planning, especially through very low risk or actually zero risk products like guaranteed plans, and preparing for your retirement. Added to this, the shift to digital, where consumers actually naturally gravitated towards digital. So we started investing our efforts in building a digital advisory, which could help address this shifting of consumer needs.
Correct.
What pandemic also did was, Shivani, actually it helped us, or rather forced us, let me be very honest and say forced us, to take a step back and relook at the overall proposition that we were offering to customers through our distributors. So what we have done is did a complete relook at what we are offering to consumers, how we are offering to consumers, do a deep dive, take a moment to understand the nuances of customer thinking and money habits. And this is what pandemic has done to all of us.
And what was this relook that you mentioned all about? Can you also share in some details? Because it's kind of interesting that you say that.
So, insurance is always a complex product. People do not understand the product. The industry over a period of time, especially during the initial years, had done a lot of not so good practices of selling. So there's a huge mistrust in the consumer. And at the same time, if you look at this business, almost more than 90% of the sales is completely assisted by an advisor or a distributor. For all the gains in the digital world that we are saying, consumers buying life insurance on their own without any human intervention is in single digits for the industry. So when there is a person involved in advising the consumers, in helping in picking up the proper insurance, pandemic took that meeting or that interaction out of the way. which means that all of these advisors for so long, for almost so many years, they were used to meet customers and selling. That was no longer available. And that is what I meant to say, that we actually had to relook at the entire way in which we were selling. And that really helped us actually. Probably it would have happened. It would have happened maybe 7-8 years down the line, where we would have relooked at the customer journeys, tried to digitize every process, make it as seamless as possible. That would have taken some time, but pandemic forced us to do it much before.
Yeah, Abhishek, at one end, there was this increase in demand. At the other end, companies such as yours were also grappling with, their own issues like work from home implemented, no direct interaction with the consumer, which you confessed by yourself that, there has always been an individual, speaking to the customer to make that decision to buy the insurance. So what were these challenges, and how did tech intervention help you address these issues, and what was the tech stack like?
I will answer this question in 2-3 parts. Okay. The first part is what we call as and the focus initially when the pandemic struck was ensuring that the distributors are made aware of the new way to sell, because as I told you earlier, they were not used to selling. They were only used to selling face to face. So the first and foremost priority of all insurance companies was actually to get distributors acclimatized to the new way of selling. So what we did was we built a platform which we internally call it Dial for Success. It is actually a platform which enables distributors to engage with the customers and then complete the process. At this time, it is important to note that insurance buying typically does not happen so quickly. There's always a lead time. First, when you get approach the customer, then consumers thinks, then there's a lot of objection, then there's an objection handling phase, and then there is a buying phase. Now, during all this phase, the consumer needs to be kept in touch by the distributor, and distributor needed tools to be doing so. So the platform that we created really helped. I mean, it was a very simple thing. If the consumer is having an objection, this is a module that has been created. You send this to the consumer. The consumer still has a question, send a link to the consumer and get on a video call with the customer. So everything was available on that platform. What we also did was, although it was work in progress, there was a portal that was, which we again call as Pragati. It allows all of our partners and distributors to log in the policies from wherever they are in a completely paperless manner. So one was Dial for Success, one was Pragati. We also introduced an API platform called Fiber Portal. It is especially for the new partners who are coming and associating with us to ensure that our customer acquisition process and their customer acquisition process are seamless, talk to each other. So there was this developer-friendly way APIs that we created, where products, plans, API keys, all the usage, post-integration, everything was done. It has helped us to create a tech-first platform. The fourth thing that we say is all the new solutions that we are developing, now they are born in cloud. Earlier, they were not born in cloud. Actually, they were resting on our servers. But now we are doing a cloud-first policy. And we are actually migrating the legacy solutions to the cloud too. That is the third. Obviously, which every organization has done is enabling employees to work from home. We used Microsoft Teams. And actually, I think it was a very timely switch over to Microsoft Teams, which really helped us, everyone, to move from work from home, including our call centers. Our call centers actually moved to work from home, where our telecallers were in touch with the customers from their home. Closer to home, when I say home, closer to my function, which is marketing and consumer experience, we have a small in-house studio. We actually moved the studio to the respective houses of our designers that helped them to service our internal customers. And there were a lot of digital enablement for the customers. simplified claims process for COVID, especially. We made it entirely digital. We actually set up a COVID helpline for customers, employees, and our partners. We introduced bot-based renewal payments. Our industry is also very much prone to fraud and risks. So video-based verifications to verify consumers' personal details, current location, utilizing government initiatives like CKYC and Aadhaar-based verification. All of this have really helped us to, number one, is tide over this COVID time, and more important is actually taking a leap further in digital enablement.
Correct. Also, Abhishek, how has setting up an AI chatbot helped you digitize this entire journey?
I would say the experience has been really good. The chatbot actually helps in three, four different ways. One is obviously when the consumer is interacting with us, whether through our website or through our partners. The chatbot, since it is intuitive, it really helps us to give answers to consumers without any human intervention. Something that would have required a human intervention, which is from probably a sourcing part. The second part is servicing. It has really helped us to offer services to customers. See, most of the services that our existing customer needs are fairly simple in nature and fairly repetitive in nature. They might need their premium payment receipts. They might need their income tax statements. They might need their what is the value of their funds if it is a ULIPs. And all of these things, actually, you don't need human intervention. So what it has really helped us to completely remove human intervention from where it is not required. But we also realize is the kind of business we are into, it's a human to human business. So the bots, yes, needs to be complemented by a human whenever required. Our experience has been fairly good one, but we still believe there's a lot of ground to be covered.
Okay. Abhishek, one more question pertaining to the chatbot. Can you share with us what has been the business impact of the chatbot, and how much has been the ROI when it comes to the chatbot?
Yeah, Shivani, chatbots actually are tools that we have employed to offer enhanced consumer service to the customers. So if you specifically ask me whatever has been the ROI in that, the answer probably is very difficult to give in absolute terms. However, along with chatbot, there are a lot of initiatives that we have put in place. What all of these initiatives, including chatbot, have done is our net promoter score, actually, which is the benchmark, which is used as the measurement technique across the globe. Our NPS has actually steadily shown an upward trend ever since the pandemic started, and I would attribute it to all of to the initiatives that have been put in place, including chatbots.
Okay. And finally, before we go, what are the key trends to keep in mind for this insurance sector, and how will it shape your business in the coming days?
We as an industry are fairly regulated. And let me just probably give you an example of fairly regulated. The moment we have priced a particular product at a particular price of insurance, then I have to offer that price throughout the life of the product, irrespective of the price costing going up and down. That is number one. Number two is, and which is rightly so, I cannot incentivize. We are not allowed to incentivize or give gifts for buying insurance. Which actually is a very good step by the regulator, because it allows us to offer insurance in the way it should be offering on the strength of its product. What it does hamper us is offering personalization to a customer. So if I am offering an insurance product to Mr. A, the product needs to be suited to Mr. A. Currently, I am able to offer him or her a product which is suited to persons like A. So the first trend that I see is hyper personalization, because ultimately it's an insurance product for my life, and therefore the hyper personalization is what is going to be the trend that is going to drive the category. Second is I call it risk based pricing. because and it is actually following up from the personalization, because the moment you personalize a product, the risk appetite and the risk overall framework of a particular customer is different from each customer. So the pricing will have a lot of risk factors aligned in. So personalization along with the list-based pricing. And the third part, which is going to be key about, is the digital advisory. While yes, we have made a lot of progress with digital advisory, there will be a unique model which will be existing, which is a mix of face-to-face selling and enabled by digital tools that are available. So the advisor who's coming to selling you is doing a lot of things online at the spot, sitting at your place and completing the full process over there. And that is a mix of digital and personal advisory that I was saying. So I would say these are the three very large trends that will define the industry.
Abhishek, since you mentioned personalization and hyper-personalization early on, can you share with us what are the steps taken by your company, Edelweiss Tokio Life Insurance, to personalize the products for your customers, and how are you doing it over the course of the past 2 years?
Okay, so let me give you a couple of examples. What we also we all realized during our consumer insighting process was in India. See, term insurance is essentially an income replacement product. So if you do not have an income, there's nothing to replace for, and therefore, housewives in India normally are not eligible for term insurance because, as I told you, it's an income replacement. But we realize that's not fair. That's not fair because there's a lot of value attached to what a lady of the house, especially working in home, is doing. So we introduced a product which we called as Zindagi Plus, where you could actually cover both the lives, one after another, in the same product, which was kind of a personalization. But again, I'm saying it is a kind of personalization at a scale. It is not hyper personalization, but that's how the personalization journey started. Second step was an example of a product. What we realized is when you're buying ULIPs, consumers realize that while I'm investing 100 rupees, not 100 rupees are getting invested. Some amount is going back to the insurance company in terms of the mortality charges, policy administration charges, and which was a point of friction. So to compensate for this, we told customers that if you are investing 100, we are going to invest 101 from your side. And we introduced a category of product which later came to known as a fourth generation ULIP or 4G ULIP. So that was a personalization based on a friction that was available. We realized that there's a lot of personal problem is people are losing their income or their salaries are going down. So we have introduced a product which actually creates a stable source of secondary income for our consumers, and we called it active income. So all of these products are a step towards personalization. But again, it's with a caveat that it's a personalization at a scale. Currently, we are doing a lot of consumer insighting process. We are actually have embarked upon a large design research project to understand consumers' mindset and to find out pain points so that we can offer a proper personalized product to them. It's too early for us to say on the results of those research, but I think within this quarter, we should have some results coming out.
All right, Abhishek, thank you so much. Thanks for joining us today.
And thank you, Shivani. Thank you for the lovely conversation. Thank you.
That was Abhishek Gupta from Edelweiss Tokio Life Insurance sharing with us how the company has evolved itself over the past 2 years to better service its customers and what are the trends to foresee for the insurance sector in the coming days. Thank you for watching Haptik Customer First, presented by CNBCTV18.com. Goodbye.